Hello, folks. It's been a long time, and I'm glad I'm back to talk to you folks and to listen to your needs. And meanwhile, I've been off the radio now for, I don't know, a few months, but we're back. We haven't done podcasts in a few months, but we're back. And, we always talk about retirement. Mike Newmeyer, financial advisor, that's my work, is retirement. If you can remember, that's what I do. And we're going to try to cover mostly the financial issues in retirement and the planning issues in retirement and, help folks. We've gotten a lot of questions, emails and letters and so forth looking for us. And that's part of what motivated me to get back on here because, wanting to answer the questions that most people ask. Okay. So the biggest question is, are you ready to retire? Do you really want to retire? What do you want to do when you retire? Do you know that about 40% of the people that retire go back to work at least part time? They don't have the things to do that they thought they would. Retiring wasn't always the relief that they thought it would be. I've had people tell me they were just bored. Maybe their spouse wasn't retired, so they don't do the things they thought they were going to do, or they did the things they wanted to do, and now they've kind of run out of things that they want to do, so they go back to work part time. Now, that may not be the case with you. I like sitting down with people and talking about what their thoughts are. Is this going to be the golden age for them? Is this going to be the miracle time for them? Is this going to be the time when they're able to reach those goals that they've always had, that they're going to be able to travel the way they want to travel? Can they afford to do the things they want to do? What unexpected experience are they going to have in retirement? How's their health? Are they prepared for problems with health? Are they prepared for the financial issues that may come up? Have they kept enough money in reserve to help them, take care of emergencies? All these things are issues. A lot of people that I find that I talk to really haven't considered some of these things. Some of these things are in plans. Some of these things are not in plans. Some people don't have plans. Some people do have plans. I have helped people put together plans and ask them 1,000 questions in order to do that. And I'm ready to do that now with you. Remember, retirement is my business. I've been doing this since 1999. So now we're going into 25. That'll be, 26 years doing this. I've worked with a lot of people through the years. I've learned a lot. I've got more experience at this work than most of the people you're going to talk to. So that's the thing. I tell people when they talk about Social Security, you can go online, you can open an account, and you can go down to the Social Security office and talk to the most experienced people to get the most accurate information, probably even more accurate than calling Social Security. And that's what I feel I bring to the party. I think that if you've done it for as long as I have done it, that I understand a lot. I'm sure I don't have all of the information. Nobody ever does. But I've got more than most people. And incidentally, I've learned from all these people that I've worked with. And I can share the experiences anonymously. I'm certainly not going to tell you the names of people I've worked with. But I can tell you similar kinds of situations when I hear your situation. And I can help you really put together something that's going to hold up. Now, my business is basically financial. I'm not a lawyer, and I'm not an accountant. We've referred people to lawyers and accountants, and you probably already have a good accountant doing your taxes, and that's great. And I can talk to accountants to help them as far as your investments are concerned. And I can advise you on anything and everything you're putting your money into and try to help you steer you correctly in the right direction so you get the most for your money that lasts the longest time. We have some things, of course, that are lifetime. Social Security and pensions, if you have pensions and so forth. Some people worry about Social Security. They think, well, the Social Security fund is going to go away. Well, the Social Security fund is one of the most important things that we have, and especially with legislators, because they know that if they let that go, if Congress doesn't maintain Social Security, they're probably going to have a real problem when the next election comes around, because we know that the older people are the absolutely certain to vote. So we know that those people want to get reelected. Their job is more important to them than almost anything. So I don't worry about that. I know that we're going to be shrinking expenses in government, and I know that a lot of that money, a substantial amount of that money is going to go into the Social Security fund. It's never going to be in real danger of going away, and certainly not during our lifetimes. So keep that in mind. Feel safe as far as that's concerned. Pensions, similarly, pensions that you have, especially government pensions, but all pensions are preserved and protected by the Pension Benefit Guarantee Association, where reserves on all those pensions exist. So pensions and Social Security are very secure. I wouldn't be concerned about those. What I would be concerned about is other things, other investments that are not going to provide you with lifetime income. That is my business. My business is helping people get lifetime income that they're not going to have to worry about, that's not going to run out. Yeah, that's the way it is. I have people say to me, well, how long will it last? I said, well, I don't know how long you're going to last. I don't know how long your spouse is going to last. But as long as you folks last, that's how long you're going to get those incomes. Okay? Very, very powerful. Very, very important. Okay, so those are the kind of things I work with. And, have we planned our time? I say that to people. How have you planned to use your time? Use your time. How do you plan to use it? A lot of folks want to talk that over. They want to. In fact, I have husbands and wives that come in and have discussions with me, and really they're kind of debating between them. They're almost negotiating between them on how they're going to spend the time. We are thought provokers. Our job is to help you get started and help you get started on other lifetime income. So you can take all of your income. You may have sources, you may have, some rental property, you may have other things. But we want to look at what you've got for income, because income is probably one of the two most important things financially in retirement. One is expenses, and not what your expenses are today so much as what they're going to be like later on. What have you done about long-term care? Have you done anything about long-term care? Have you got any ideas? A lot of folks just ignore that, and that's not a good thing. You've got to think about it. You've got to have the answers. What do you plan in order to take care of yourself as you get older? So that's a big thing. What kind of life insurance do you have now? What kind of life insurance? Is it term insurance that's going to run out that you carried while you were raising a family? Where do you stand with all of that? There's other things you can do. In fact, there's even long-term care insurance that is today much more affordable for people over 50 than it ever was before. Most people will say, well, long-term care insurance is very expensive. Well, it's expensive, but it's manageable today, much more manageable than it used to be. So these are the kinds of things we look at. All of those are elements in planning. All of those are important things in planning. What are you going to do about other family members? Not the immediate. Do you have some responsibilities as far as your mother, your mother-in-law, your father-in-law? Are there people in the family that have special needs that you're going to have to prepare for? Where does that all stand? So you've got to really think about that. And we're going to cover that. Each week we're going to talk about different topics. And next week, but we're going to stick on income for a while. I want to remind you who we are. I've been doing it for 26 years as of January 1. 26 years I've been doing this. I've served the community all this time. Anybody, in Maryland, I've got people coming from the Eastern Shore. I've got people coming from, local areas like Sykesville and so forth, and Westminster and Towson, Maryland. Just basically wherever the radio is heard. And we do a lot of mailings to help people understand what's available. Right this very minute, you can get over 5% in two-year annuities, much like a CD, except it's growing tax deferred. And you can put IRA money in there. You can put money from savings in there. Where are you going to get 5% now? The rates are dropping. If you give us another year, we're probably going to be down another 1% in as far as interest rates are concerned. Not a bad time to think about buying a house. Not a bad time to look at rental property. Not a bad time to look at retirement property. A lot of folks are downsizing. So that's a possibility. This would be a good time to scout around and see what's happening in the real estate market. You need to find a real estate person that is really on top of things. Now, I know one lady that's absolutely phenomenal in Baltimore County. I'll share information about her. I know other companies that do a lot of good, reverse mortgage work. May or may not be of interest to you. You can find out at least what you can get in a reverse mortgage if you're 62 or older. At least you can find out. Doesn't hurt to find out, and you can get an idea of what kind of money is available in cash, what kind of money is available in drawdowns with a checking book, and that sort of thing. So there's a lot of things to be aware of. You need to know what the CD rates are all over, the greater Baltimore area, and they vary. They vary. There's some banks that hold on to high rates because they want that money to loan out. You can't loan money out unless you've got the money to loan out, and you have to have reserves against those, loans, because some won't be performing. On and on and on. So there's things that we can help steer you in the right direction. Those things are not my business. Those things are the business of the folks that come in here, and it's my business to help people that come in here. Love to write plans, love to analyze, love to help people do the right things. Now, those are the kinds of things you learn with experience. Go back to the 26 years. The 26 years that I bring to bear to help you put your plans together. I'm going to break for just a minute, and I'll be back. Folks, again, I want to cover some more details and items that I have written down here for you for the rest of the show. And I made a list here of things that many people have asked me about. And the questions I get, one I've got, and this is not necessarily as a matter in importance, this is just a list. So one thing I get asked for is savings. How much money should I have in liquid money in savings or checking and so forth and so on that's available to me? Well, the rule of thumb is that you ought to have $1,000 for every year of your age. So if you're 50 years old, then you ought to have $50,000 that you can tap into as you need it, and then, so that's one thing. Being able to get it, write a check, get the money as quickly as you can. Maybe coming from different sources, maybe coming from a savings account or checking accounts, or might have a line of credit on your home or whatever that is available. So knowing what is absolutely available, and your family members, the people that you're the closest to, if something happened to you and you were not able to function, then somebody has to have a durable power of attorney, which enables them to act in your behalf. So if suddenly you're in a hospital, let's say you're not conscious, let's say there's a short-term disability, and you need somebody to help you take care of your matters and so forth, well, then they have to have a durable power of attorney in order to go to a savings account or whatever and act in your behalf. You may have some cash values in whole life insurance or permanent insurance of any kind, whether or not it's indexed universal life insurance or any kind of life in any kind of universal life, any kind of permanent insurance. There could be cash values there, and those cash values are available to you. So knowing what they are, and I think people ought to review all of these things that I'm going to talk about. They ought to review at least once a year so that you know where you stand on all of these issues. And one of the ones that is most important is, what do you have available? I know people that check their accounts on a daily basis. I don't think there's anything wrong with that. I know people that pay down their credit cards, to zero at least once a month. Now, those people that are that conscientious and take care of their money that well, okay, and are able to check their accounts online. And if you don't know how to do it, then find out how to do it for your banks. You may have more than a number of accounts, and being able to look at those things and a list of any CDs and so forth with their ending dates and so on. Staying on top of and conscious of your money now and when you retire. Now, when you're retired, you may have more time to do this, and more things are online, encrypted by the banks, so it's safe, and you can look at those things. So you need to be conscious of them. Some folks don't want to look at those things. I understand. Some husbands, some wives, they don't want to do those things. They want the other person to do them. Okay. But if something happened to that person, the other spouse needs to be able to understand what's going on. So the communication between the two of them is very, very important. And, regardless of what attitude the other person has, it still has to be available to them. We give our clients a book where they can put all of their assets in, and the spouse can know that everything is there, and it can be updated so that continually, on a continuous basis, the balances in all the accounts, whether it's cash values in life insurance policy, whether it's rental income and where the money comes from, who pays the rent, when do they pay it, and so forth, how do they pay it, those kinds of, if you have rental income. What is the balances in your checking account or checking accounts? And what's the balance in savings account or savings accounts? Where are the banks that you deal with? All that, where are the telephone numbers? Who's the contact person in all those institutions? If you have annuities, they should have the 800 number available to you, or you have my number if you're working with me. And I, of course, service all that sort of thing as far as annuities are concerned with insurance companies, or life insurance with life insurance companies. Those kinds of things I do for my clients all the time. So having somebody that is an intermediary, that is to say a financial advisor and an agent and so forth, that's available, and that information, who they are, telephone number and so forth. I tell folks, when you come to review your accounts with me, bring your spouse. Bring your spouse. Let them at least hear what's going on so that they have a feel for what takes place, what transactions are. We have to always remember that everything in money is always changes. Nothing stands still. Interest rates change and so forth. Now, some things stay the same. Lifetime income with the products that we deal with, yeah, that doesn't change. Once you're getting lifetime income, you're getting lifetime income. And you know what it's going to be. We can tell you when you put money into one of our products, we can tell you what the lifetime income is going to be so that you can plan on that. And you can take it monthly, you can take it annually, you can take it quarterly. Most folks elect to take it annually so that they can put that money in an interest-bearing account and draw it as needed. A money market account may pay more than a regular checking account and so forth and so on. Or they can use a ladder process where they put money in and take money out that is the oldest money in and let the newer money grow for 6 months or whatever. If you can do that, if you have the liquidity to do that, and I can help you figure that out, then you can gain interest even on the income you're taking out. You take it annually, you're not going to use it all annually. So it may pay to put that money into something like a savings account, a CD, some money market account, something that's going to earn you money before you actually use it. So those are some possibilities. And incidentally, you don't get any more money out of an annuity by waiting month to month. Okay, getting it all at the beginning of the account, the year that you start. In other words, if you started on March 10th, okay, then that's when your investment year begins, and you can start income immediately. So you could get 1 year of income, as soon as they process it after that March 10th date. That works that way. That's a very good thing to know. Some people don't want to worry about investing that money on a short-term basis. That's their decision. But the possibilities are the things that you need to know and write down and keep the information and have somebody like me that's willing to communicate with you on a regular basis. Now, you need to initiate the communication. You need to initiate the communication. Nobody in our business can keep up with everybody by calling them and contacting them. It's your accounts. You should contact your advisor. You should contact me, and I will schedule an appointment with you to come in and review everything. I can send you spreadsheets that show all your accounts, and you can look at them on an updated basis where you stand, and you've got a record of them on paper. When you come in to review things with me, I make sure when you leave, you've got one of those too, incidentally. And we've had a chance to discuss changes that are probable in your accounts that need to be addressed things that you want answers to. And so the review is very important. That's with me. Reviewing with your estate attorney is also very important. I know from my own experience that things are always changing. So you want to think about that. And once you do a will or a trust, it doesn't mean it's all over. That's just the first step. You've got to review these kinds of things, with your estate attorney. How often? Depends. Let the estate attorney tell you what he thinks or she thinks is a good time to do it. Once a year, once every 2 years, once every 3 years, whatever it is, that's what you want to do. Otherwise, you could do something that you change your mind on later and didn't address. Something happens to you, you're stuck with those decisions you made earlier. So those are some possibilities. When it comes to saving money, you think about saving money that you pay taxes on every year. That's one thing. What about tax deferred? For instance, we've got a 2-year product that'll earn you 5% right now. So it's deferred for 2 years. So you're not paying taxes on it every year. You pay taxes on it when you take it out after 2 years. If you take it out after 2 years, or you can renew it into another one that's tax deferred. So those are things you need to. The big difference between tax deferred and the compound interest in a tax deferred product is phenomenal. I remember reading a long time ago, Einstein said the best invention in American culture is tax deferred money. Tax deferred money. And it is very important. That's how money grows in a straight line, having it be deferred tax-wise. So those are some possibilities. And you need to review all financial matters and have that information available for your family. And so those are some things you want to think about. I'll come back after the break and I'll give you some more ideas. Finally, folks, I want to remind you, I will be here once a week. I want you to send me questions. I want to talk about your questions and your ideas. If you want to call here, the number is 410-902-0464. You can do that. And you can also call and get a further contact information. You can go on our website, Game Plan for Retirement, and you get contact information there. So there's different ways that you can bring the questions to us. We would love to answer questions. We love to help people. There's no obligations. If you come in to see me, anytime I spend with you, I don't charge. That's an interesting proposition because most people in my business are going to charge you for time unless you do business with them. I'm a little different. I like to help people. You can test that by coming in, and I hope you will. I hope you give me a call today. Do it now. Don't wait. We can give you an appointment. The sooner you call, the more availability there will be for appointments. We always get a number of appointments after the shows. That's what we did for many years. Now we're back on. We're back on to help you. Remember, we're here to help you. And I love to talk to people. I love this business, and I hope I stay in it a long time, and that's my plan. So give me a call. Again, 410-902-0464. Mike Newmeyer. I'll be with you every week, and we'll try to address all the issues that you want help with. Thanks again. Talk to you next week.